In the vibrant economy of Colombia, understanding the tax system is crucial for businesses of all sizes. Choosing the right tax regime is a critical decision, impacting a company's financial health and compliance. Two primary options exist: the ordinary regime and the simple regime. Each presents its own set of advantages and disadvantages, catering to different business models and income levels. This essay delves into the intricacies of both regimes, providing clarity on their workings and guiding businesses towards making an informed choice. Navigating the complexities of tax regulations can be daunting. This is especially true in a dynamic environment like Colombia's. Therefore, understanding the nuances of each tax regime is not just important, it's essential. Making the right choice can streamline financial operations, optimize tax liabilities, and ultimately contribute to sustainable business growth. The ordinary regime, also known as the traditional regime, serves as the standard tax system in Colombia. It applies to both individuals and businesses. This regime is particularly relevant for larger companies and those with more complex financial structures. It operates on the principle of taxing net income, which is calculated by deducting allowable expenses from gross revenue. The ordinary regime is governed by a framework of specific regulations, including the Income Tax Statute, Articles 240 to 266, Decree 1625 of 2016, and Law 1819 of 2016. These regulations outline the intricacies of tax calculation, deductions, and compliance requirements. One of the key advantages of the ordinary regime is its comprehensive approach to tax deductions and exemptions. Businesses can offset various expenses, such as operational costs, depreciation, and specific investments against their income. However, this regime comes with a higher administrative burden. Businesses are required to maintain detailed accounting records, adhere to stringent reporting standards, and possess a thorough understanding of applicable tax laws. The complexity of the ordinary regime often necessitates professional assistance from tax advisors and accountants, adding to the overall cost of compliance. Introduced as a simpler alternative to the ordinary regime, the simple regime aims to foster entrepreneurship and support the growth of small and medium-sized enterprises, or SMEs. It consolidates several taxes into a single, unified rate, simplifying the tax calculation and payment process. This regime is particularly beneficial for startups and businesses with less complex financial dealings. The legal framework governing the simple regime has undergone some evolution. Initially introduced by Law 1943 of 2018, the regime faced constitutional challenges. Subsequently, Law 2010 of 2019, specifically Articles 74 onwards, and Decree 1468 of 2019, laid the foundation for its current implementation. The simple regime is characterized by its streamlined approach to tax obligations. Businesses under this regime face fewer reporting requirements compared to the ordinary regime. The simplified accounting process reduces administrative burden and allows business owners to focus on their core operations. However, the simplicity of the simple regime comes with certain trade-offs. One of the main drawbacks is the limited scope for tax deductions and exemptions. The unified tax rate, while advantageous for some, may not be as beneficial for businesses with high deductible expenses, potentially leading to a higher overall tax liability. Introduced as a simpler alternative to the ordinary regime, the simple regime aims to foster entrepreneurship and support the growth of small and medium-sized enterprises, or SMEs. It consolidates several taxes into a single unified rate, simplifying the tax calculation and payment process. This regime is particularly beneficial for startups and businesses with less complex financial dealings. However, the simplicity of the simple regime comes with certain trade-offs. One of the main drawbacks is the limited scope for tax deductions and exemptions. Section 4, Head-to-head ordinary versus simple, a detailed comparison. The choice between the ordinary and simple regimes hinges on key differences. The ordinary regime focuses on net income with deductions, while the simple regime uses gross income, offering limited deductions. Payment frequency also varies. The ordinary regime involves annual payments, while the simple regime requires bi-monthly payments. The ordinary regime allows more deductions, while the simple regime offers simplicity with fewer deductions. The ordinary regime uses progressive tax rates, while the simple regime has consolidated rates. The taxes covered also differ. The ordinary regime includes income and occasional gains tax, while the simple regime integrates national consumption and industry and commerce tax. Section 5. Choosing wisely. Finding the perfect fit for your business. Selecting the most advantageous tax regime is a critical decision for any business in Colombia. Several factors influence this choice, with company size, income level, and desired level of financial control being paramount considerations. The simple regime, with its simplified structure and ease of compliance, proves ideal for entrepreneurs, freelancers, and small businesses seeking an economical and manageable tax solution. Its bi-monthly payments can be beneficial for managing cash flow, particularly for businesses with less predictable income streams. Conversely, the ordinary regime caters to the needs of larger companies and those with higher income levels. Its comprehensive approach to tax deductions and exemptions can lead to significant tax savings, especially for businesses with substantial operational expenses, depreciation costs, or eligible investments. However, the administrative burden associated with this regime is undeniable. Businesses opting for the ordinary regime often require dedicated accounting personnel or external tax advisors to ensure accurate record-keeping, timely reporting, and compliance with the complex regulatory framework. Ultimately, the choice between the ordinary and simple regimes requires a careful assessment of a business's specific circumstances. Section 6. Seeking expert guidance, the key to tax optimization. Navigating the complexities of the Colombian tax system can be challenging, even for seasoned business owners. While this essay provides a comprehensive overview of the ordinary and simple regimes, consulting with a qualified tax expert is essential for making informed decisions tailored to your business's unique needs. Tax advisors possess in-depth knowledge of current regulations, potential deductions, and the intricacies of both regimes. They can analyze your business's financial data, assess your eligibility for specific deductions, and guide you towards the regime that aligns with your long-term financial goals. A tax expert can also assist with tax planning strategies, ensuring you leverage all available benefits and minimize your tax liabilities legally and ethically. Remember, tax laws are subject to change, and staying updated on these changes is crucial for maintaining compliance. A tax advisor can keep you informed about any modifications to tax regulations, ensuring your business remains on the right side of the law while optimizing its tax obligations. Section 7. Conclusion: making informed decisions for business success. Choosing the right tax regime is a pivotal decision for businesses operating in Colombia. The ordinary regime offers a comprehensive approach, allowing for deductions and exemptions but requiring meticulous record-keeping and a deep understanding of tax laws. The simple regime, on the other hand, prioritizes simplicity and ease of compliance, making it ideal for smaller businesses and entrepreneurs. Ultimately, the optimal choice depends on your business's specific characteristics, income level, and long-term financial objectives. Seeking guidance from a qualified tax expert is paramount in navigating the complexities of the Colombian tax system. Their expertise can help you optimize your tax obligations, ensure compliance, and focus on what matters most: growing your business.